Is Hyperliquid's massive success actually a threat to its own token? It sounds like a paradox, but as of today, August 9, 2026, we are witnessing a strange phenomenon. Hyperliquid has successfully captured the spotlight by topping DEX volumes, driven largely by a massive boom in real-world asset or RWA perps. We are seeing a surge in traders wanting to trade things like Tesla stock or gold directly on-chain. However, this explosion in RWA activity is creating a massive tension. While the volume looks incredible, the actual revenue being generated is not following the same trajectory, creating a major question mark for HYPE token holders. To understand why this matters, we have to look at the numbers. We have seen a staggering decline in monthly fee revenue. Back in August 2025, Hyperliquid was generating approximately $122.4 million in monthly fees. Fast forward to June 2026, and that figure had plummeted to just $42.0 million. This represents a massive 66% drop in revenue. This decline is happening even as the RWA market itself is booming, growing from $5 billion to $24 billion in under 3 years. This divergence suggests that the way RWA perps are being structured is fundamentally changing how fees are captured and distributed, potentially diluting the value that was meant to back the HYPE token. So, what is causing this shift? The answer lies in the evolution of their product suite, specifically the HIP-3 framework. This framework is allowing Hyperliquid to bring high-value assets like gold and Tesla stock into the Perpetual swaps mix. While this attracts massive liquidity and keeps Hyperliquid at the top of the DEX volume charts, it changes the economic landscape. As these RWA perps become the primary driver of volume, the traditional revenue models that previously supported HYPE are being squeezed. We are essentially watching a transition from pure crypto-native trading to a complex, hybrid model where real-world volatility meets on-chain mechanics, and the old revenue rules no longer apply. Looking ahead, the landscape is shifting toward total tokenization. With players like Ripple expanding their push into tokenized finance through the XRP Ledger and Wormhole, the competition is heating up. We expect to see more on-chain vaults and a wider array of assets being unlocked, similar to the recent movement of SpaceX shares. For HYPE, the next few months will be critical. The market is watching to see if Hyperliquid can find a new way to capture value from these RWA perps that actually benefits the token holders. If they can't bridge the gap between high volume and high revenue, the HYPE token might struggle to maintain its long-term value despite the platform's dominance. The takeaway for today is clear. Hyperliquid is winning the battle for volume, but they are currently losing the battle for revenue efficiency. The RWA boom is real, and it is transformative, but it is also disrupting the very economic engines that powered the first generation of DeFi. For investors, the lesson is simple: volume is a vanity metric if it doesn't translate into sustainable revenue for the ecosystem. As the line between traditional finance and crypto continues to blur, keep a very close eye on how these new RWA protocols manage their fee structures. The winner won't just be the platform with the most volume, but the one that can turn that volume into actual value.